We're looking at the Magnificent Seven Australian style, reviewing the strongest performers over the last 12 months. Taking a leaf out of William O'Neill's book, where he would study the best performers on the market each year to help him reflect and trade better in the years ahead. The strongest names that we're looking at, we want to know what we can learn from them and serve the best traders in history very well, and we're sharing that now with you. Most resources are US focused. Obviously, we're providing the ASX with the Australian slant. Gary Glover's done the hard work, marked up the charts, and here he is. Good morning, Gary. Thank you for preparing all of this.
Yeah, it was a great intro, Chris. I reckon you nailed that. So, everyone sort of says that, we don't get many leading or great stocks like the US does. And look, maybe they're right to some element, but there's definitely some magnificent stocks on the ASX 200 year on year there, and some massive returns. Just whether we are able to get on it. Look, maybe there's a bigger basket to choose from, obviously in the US, like everything else in the States there. But there's definitely still some fantastic opportunities there on the Aussie market there. And having gone through, and I've sort of picked out 7 from the top 10 that I think are probably the best tradable, sort of best lessons, and just a summary there. I think it's great to go through these things and actually try and kind of learn from history, learn the setups, and just see if we can sort of keep seeing some sort of themes there, and what can we learn from the strongest names, so that hopefully we next year we see the sort of similar setups, we can sort of get on board and capture some of those. So first one on the list is CU6, which is number one on the list. Really, that's the top stock for the year, Chris, year on year. So
well, definitely that chart's phenomenal, and they're an innovative company, an Australian company working that biotech space, pioneering the cancer treatment with a very targeted approach for the treatment, so there are less negative consequences for the broader brush. So that's kind of the overarching. If that's the theme, if we're looking at medical, life sciences, biotechnology, in sort of the clinical or the late clinical stage, looking for approvals, clearly a volatile company. What do you look at from the charting perspective, and what stood out to you in this run over the last 12 months or the lead up into it?
Yeah, I mean, CU6 was around for a couple of years before it really sort of got going there. And oftentimes you sort of see that those leading names is that maybe they've been around for 12 or 24 months. And oftentimes then maybe they come on a bit hot and then go through a bit of a period there, and then the business starts to sort of the wheels start turning, and then a couple of years obviously later, then that's when you sort of start to get your strides there. So really this didn't get going there until the second half of sort of 22. And what's probably interesting there, Chris, is that it's found a low in June of 22, while the market found a low in October. So really this had already sort of come out of the gates there, while the rest of the market was pretty weak. So it's sort of showing relative strength. And we can go back and, I think if you watch the other video that we've done recently there on the relative strength sort of theme there, and saw a lot of those themes there, we saw gold and uranium were very strong, similarly sort of out of that period. And a lot of the leading names that sort of rallied before the market low were showing relative strength as the market went on to have some bigger moves as well. So this is in line with what was going on. So we had relative strength there from CU6, and then we had this little tight, sort of descending wedge in there, and then we got a breakout there. So as the market was basically breaking out, making a low in October, it started to come out. This was a nice high and low, nice little VCP or descending wedge pattern there, high low pattern there, and then we got a really impulsive drive there. Went through a bit of a congestion phase. So obviously, traded back and above the 50, and ended up sort of probably staying below the 50 for quite a while there, but eventually end up sort of in this sort of what we call like a rectangle period there. If you look closely in this rectangle period there, we actually saw a false break of the low, Chris. I love seeing, margin new low, a bit of reversal. And then we've had 1, 2, 3 touches at the bottom, 2 across the top there. Once we break outside the rectangle, plenty of quality touches there. If you've read Bulkowski's Cyclopedia chart patterns, you know that the rectangle has got one of the lowest failure rates of any technical pattern out there. So once we sort of come out at the top there, probability is pretty high that we're going to, at least sort of move at the size of that rectangle. And this, continued higher here, a little bit of a, might say a little cup on the handle there, nice little tight congestion there, and then breaking up there. Had a pretty strong move there. So, that's sort of in the low 80s up to 130 there. And then what down here, you're probably looking for 60 cents up into the, the 1 sort of 10 zone there. So again, in terms of trading, how we trade in and out of these things there, obviously we trade the break here. So obviously we had two breaks there, but I know sort of some of the top traders that we follow there, they talk about at least using the sort of 10 or the 20-day moving average grips as well. So if it was just a sort of a mild strength there, you'd be tracking the 20. But if it's a really that's a pretty vertical move here. Once it's sort of close below the 10 here, so whether you use the 10 or 20 there, you'd be sort of stopping out somewhere around 95 cents there after a 60-cent entry. So pretty nice little move anyway. And then again here as well, you're looking at probably the low 80s there. And again, this probably hugged the 20 here all the way through, and eventually broke the 20 here, maybe up around the 115, 116 mark as well. So again, a pretty nice move in that sort of first year. So the interesting stuff of CS6 is this is one of 3 charts. So this is only just the start here. This is the thing I'm actually starting to learn about these stocks with sort of relative strength, is that they go strong, they have a bit of a pause, but then they set up again. So we can see here that after getting to 130, it's come back in a bit of a, maybe a bit of a sharp move there, but still a bit of a corrective decline there. You look at the weekly there, so you're probably just sitting sitting on top of the old high as well. So oftentimes when they come back, sit on top of the old high, that's a pretty good setup there. And then we're looking for a little, looking for a little B-wave break here. And we do get a break here, probably around that 105 zone there. So we look forward here. This is the congestion here. And we're coming out of this 105 zone after a bit of a break. And then, look at this market here. It's really sort of impulsive there. If you look at, it's hard to sort of show here. I tried to highlight them there, but each time it sort of popped out of the range, we saw volume surge. Popped out of the range, a volume surge, popped out of the range, volume surge as well, another pop out of the range as well. So each time it sort of hit a run, have a bit of a pause, and then it would break out of that little tight zone on pretty good volume. Had a breakout here on good volume, breaking out here on good volume, breaking out here on good volume. So just every time it broke out, really buoyant volume there. So after sort of getting an entry at 105, you potentially could have had other zones here to actually add to your position. And you can see here, it went nowhere near the 20-day moving average really until the top here. And really it's sort of almost sort of hugged the 10. The 10 might have been a little tight there initially. Usually what you sort of find is that if they're moving sort of slower there, you're probably using the 20-day moving average. Most of the traders will sort of start with the 20. And then once it starts flying or if it starts getting vertical, and then you're sort of really sort of hugging the 10 pretty close. So maybe this might have been, if you're seeing this thing vertical going for a while here, this might have been the first exit potentially there around that sort of 215. So after getting a 105 entry, you might have been getting out at 215, which not a bad return. Again, this is after 30-40% gains in the first year. Then you're getting 100% gain on this move here, just following the basic sort of moving averages there. But what some of the traders might do there as well, Chris, is that they might hug some of it at the 10 and some of them back at the 20. So you sort of maybe you'd sell some of the heat, a quarter of the heat. You might sell half on a break of the 10, and maybe you leave 5% trailing the 20, just so not all your stops are all in the one area. Sort of one thing I've sort of definitely learned here as well. So you might have sort of got some, someone might have sold some into some of this heat here, some on the pullback, and then maybe you stayed in here until the break of the 20 there, which was probably up around the 260 zone later in the year. And then we saw this stock go through again another nice pause here. So after doubling in value almost 2.5 times, and having these were just sideways So again, no selling here. So impulsive rallies, sideways orientation, no selling coming in here as well. Very light pullbacks. If you go back and look at this move here, all these little pullbacks there, the sideways orientation, there's just no volume in there. So the seller's just in, so had a terrific run here. But then it goes for a bit of a pause there. So you might have got, at some stage there, you obviously get stopped out there, whether it's a 10 or 20, and it has you out of the market. And then, but that's a good thing, because then what happens, this goes sideways for months here. So, as Minervini says, you want to be in the market for the least amount of time as possible. So we want to trade into that, into the good times. And then when it goes through a bit of a consolidation, that's hopefully we want to sort of try and be maybe on the sidelines, sort of waiting for a setup again. So we saw this basically go sideways here for, February, March, April, and then early May, all of a sudden it pops out of the range here. So we sort of see this go sideways. It actually comes back and retests the low. I don't think it was a false break there, Chris. I think it was basically 3 touches of the same level. A little triple bottom, you might sort of say. And then we come out here that we had, this day here was a little bit of this is probably a little B-wave break here. So sometimes these aren't clear, but look at the volume. So after having no volume here, this is all dried up here. We've got this stock obviously gaps up on good news. So it's a bit of what I call like a game changer trade. So even though this has been running for good sort of probably 12 to 15 months now, this has some good news there, obviously, and it gaps up there on that good news, and that's what we call the game changer trade. And that's sort of oftentimes the sort of stocks run there. But the game changer there, the good rule is that sort of day there, that should be the low of the day should be a stop. So they can break below there sometimes, but I'd hazard to say 75% of those little gap ups on game changing news, most will continue to run. Don't break that sort of stop of the day. So this was so it had obviously gave us another setup there. We move ahead here. Look at that move. This is already up 250% here at this stage. Everyone's thinking, it's all to run too far here, and then we get another game changer entry point, and this thing just goes straight up here. Look at this, just hugs the 10. Doesn't even break the 10. Still doesn't even break the 10. And since then, Chris, we've had a tight congestion. Volume sort of dried up. We're actually popping up again. So this move here, which is up 1,475%, so 15 times off that low, is potentially still can go higher here. So pretty amazing setup, really. So that's the number one setup there. So that's the sort of a few textbook sort of setups in there. Again, that early drive, strong strength. Really sort of sideways sort of consolidations there. Every surge is on good volume. Definitely hugging the sort of 10 and 20s all the way up, most of those moves. So generally sort of hugging the 20 on sort of some of the less steep moves. On the steeper ones there, gets vertical and then hugs the 10 there. But even after this is probably the biggest lesson I've learned this year from is that these leaders will have a pause and have a cool off. Don't take them off the radar. Because I oftentimes, once it's got here and it's gone through a bit of sideways, I'll probably take it off my watch list. And then I sort of forget about it, don't revisit. And then I see them, 2 or 3 months later, they're popping through and running again. I thought, wow, is that old name is come again here. So that's a really, I highlighted there sort of probably 8 entry points. Even if you only had 4, only hit 4 of those, there were some great entries all along there. So that was number 1 on the list there.
Well, that's definitely a solid chart. And as you're working through it and showing the different setups over time, sort of different time periods, different stages of the market rally, it reminds me of the books that you and I have discussed many times with William O'Neill, talking about the best trades and the best setups. And you're talking about a new technology, a targeted cancer treatment, which is revolutionary in how it's being applied. And I think that might sort of lead into the second chart that you've put into this list, which is DroneShield. And that company's, well, obviously drones, they've been around for a while, but actually protecting ourselves from it. And I think probably when we first saw this company, we were talking about DroneShield as the application of monitoring drone activity around airports to make sure it was safe for helicopters and aeroplanes to take off and they weren't getting in the way. And the airports could have control over their airspace. to stop unintended or foreign aircraft, in the sense of drones, getting in the way and putting people's lives at risk. Unfortunately, Russia-Ukraine war has actually shown that there's a much more militaristic application of these devices, their activity, their software and their hardware, not only to the sense that they can identify when a drone is in the space, but actually sort of take control and get analytics of who's actually controlling that drone. So that probably to that point, we could say it is also new technology in that sense, reading back to William O'Neill's books from many decades ago. Is that how you saw DroneShield in this market space?
Yeah, I think I actually went to one of the presentations. I'm not sure it was Pack Partners or something like that, but I did go to a presentation years ago, and then I thought it was pretty interesting. I could see where it was heading there, but at that stage, drones were such a small, at that stage, kids were just starting to buy drones, play with them. No one was worried about sort of shooting each other down or dropping bombs with them and things like that. But yeah, obviously, again, takes a little while. I think it was around for a while as well. So I think if you look at DroneShield there, I think it was around for a couple of years there before it really had a run there. It might have even been around a bit longer actually. So yeah, it took a while to really get going. It had a few sort of flat years and stuff in there as well, but it really did have that first little sort of surge there was probably that July 23, and then it did sort of meander all the way back after having a bit of a impulsive move there, pretty good volume. Again, that's the sort of earmark there. We want to sort of see these things pop up here impulsively, have that really big gain there. Probably, I think you're looking at probably 75 to 100% type of move, Chris, as well, what you ideally want to see. Again, like almost like that high type flag type of setup, but then have that big move, but then have that little long sort of congestion there. And eventually you're sort of looking for the little bit of a B1 break here. So sometimes they can be, 3 to 6 weeks there, but sometimes they can be 3 to 6 months as well. So, yeah, but probably the first little signal there for DroneShield there after that sort of surge there was a few months later there, and it sort of really didn't sort of come out there until probably November. That's probably around that sort of 30-cent mark there. Did start to sort of break up here, start to build there. But I think probably the next entry there is probably really wouldn't have been until you sort of break to a new high. So again, it's sort of like that 52-week high, buying that, like Data's box, buying those sort of leading, like a leading sort of theme at the time there, leading stock, breaking out and getting a new high there. So we see that did have a little pullback there. This something that often does occur. You get the little throwbacks. You can see here, if you look through that period there, the one thing when you saw the throwback was that there, if you were looking at that going to a new high, you would have seen the first 3 or 4 days, you've seen no volume. There's no sellers in there. So that should give you the, some support that, still looks pretty good there. And then obviously it's gone on from there, does a little bit of a congestion pattern there, and then kind of breaks again. So possibly could have got another break here. And this was probably big news here. This might have been when, selling some of these into Ukraine or whatever was sort of going on there. So definitely sort of got some big jumps there, big volume there. And that was a big breakout there. Again, on pretty big volume as well. So pretty good surge there as well. So probably had a couple of entries there, but again, the DroneShield, that was definitely took a while to get going, that stock there. Did build there. But obviously after we sort of break to new highs there and entry there, we saw this sort of kick on there. Again, we've had this, really sort of congestion there. That little breakout on strong volume was a pretty good signal. And that's when it really drew up. And you can see that see how it's just sort of hugged the 10-day moving average. It just really got it's obviously a bit of a game changer sort of news there. And the stock's sort of gotten vertical there. That's the probably thing that is, if you are sort of trading these sort of really aggressive moves, the most aggressive moves there, usually the 10-day moving average there. So you probably want to be selling some of these in the heat there. I'm guessing that day there is probably that volume there as well, Chris, as well. So I'm telling you, when you're surging like that, that's the sort of days we should be trading some into heat there. So whether it's only a quarter or something, a third or something, should be trading something into some of those as well. But then obviously breaking below the 10 there, most of the pros would take that signal as getting out there. And then you sort of think, okay, not sure this is the point where did a cap raising. It might have been later on or something there, but yeah, did pull back there. Can't remember whether the cap raising was in here or it was in here. So one of those sort of two. I got a funny feeling this was a cap raising in here. But at this stage there, it did sort of pull back, stays well over 50. This is what we're looking for here, is that this is the thing Minabini likes to see, is that these things cool off there, have a bit of a bounce there, and then pull back, then show a bit of strength there. And then once you start breaking through here, this is probably our entry there. From all the entries that I sort of follow from O'Neill and Ryan and Dan Zanger, that's what they're really looking for, the strongest names there to bounce and pull back, and then to permeate that level there. So really, this is probably the next entry there, up around 75 cents on it. So, and again, look at this. Once it breaks out here, it hugs the 10. So again, this has showed strength here in the 10. Show strength here all again and again. All this, another big pop here. Again, the pros are always selling some. So whether it's 25% or a third into this heat here, and then it pulls back and then eventually breaks below here. So maybe if you're a bit slow here, you might have been sort of selling this until, somewhere up around 88 or something. But, this had a pretty aggressive move in there. You should have been selling some of that into strength there as well. That obviously resets there. I think this was the cap raising. I mean, to me, if I was up this day, if I hadn't sold any of this day, which would be crazy, when they announced the cap raising, I would have been selling on the open that day there, because that's when you sort of track some selling there. But does pretty impressive though. This is the stage I think where I thought it's all over for the stock, raise money, but it pulled back there and then it actually bounced again. And the thing that actually bounced again on volume here. So this is where you sort of don't let your, many Benny says, don't let your opinions get in the way here. Let the price action tell you. The price action showed pretty good volume here. Pulls back here, volume sort of there's a bit in there, but it really does sort of lighten off compared to the rally. And what's most impressive is that probably sits around 50% of this range here. So when I see but price rallies for 8 days and pulls back, so roughly the same amount of days, and it doesn't go, only goes half the range back, and that's strong. That stock's in a strong position. That's the one thing McLaren is to sort about sort of counting days and seeing, sort of how strong the stock holds up, and then it breaks out again. So this breaks out here around probably 98 cents there, and it's gone to 140. So another 40% move in there, Chris, as well. So this is probably not, this started off a little bit innocuous as stock here, but then it sort of got going here. But the thing about this stock is once it actually broke out, each of those trade setups there, they were fast trades. So you're only in the trade a small amount of time here, and this is really explosive. Each of those moves, all of them actually stayed above the 10-day moving average. So, again, it's just that having that patience to wait for the setup, and then you're setting up there. And because this had the 10-day, you would just be following that blueprint there from the first time. So some pretty good setups in there.
You did talk about in your presentation that you just mentioned at the start, we'll have a link in the notes below, where you looked at the best traders in the world and the strategies, approaches, and things that you've learnt that they use and the things that you've learnt from them. Some of them had said, and you might remember which trader it was, where normally when they put a trade on, they're in profit straight away. They're not going to go home holding the loss. So if the trade's not showing a profit after they enter it, they're out the door. And I guess that DroneShield that you've shown there, when that setup shows and you get confirmation that what you thought might happen is happening and you enter the trade, you'll be carrying a profit by the end of the day.
Yeah.
So that's...
Yeah, I know sort of Ryan's big on that. He's sort of doesn't like to lose. I think Zhang is the same. So I'm not sure about Minabini. He seems to sort of give it a bit more room all the time there, but he just wouldn't be adding to the position unless it was winning. So that's probably the difference for him, is that he really adds into the winners. Whereas some of the other guys there, if it's not winning straight away, that they're probably out.
Yeah. But as you say, they're probably still leaving it on their list, ready for it to reload, re-enter, and show a more profitable setup. But also in that presentation that you did, you talked about the timing of the markets and when some sectors and some themes actually come into stride and start lighting up the lists and showing that there's a great amount of strength here. And Spartan Resources is one of the companies that's in the gold space. And he changed the name from Gascoigne to Spartan. And there's not too much more we need to say. They're Western Australia, up in the Murchison area, and they're exposed to gold. So do you want to talk a little bit about the chart, the timings that you're seeing here, and how you would be trading a gold stock like this?
Yeah, so look, all those stocks, Chris, that we're covering here, they all hit the launch pad, pretty early, and they all showed relative strength there. So they all hit our list. They were on that list for a long, long time. Spartan's no different there. Probably the thing Spartan was that most of the other winners actually started pretty hot, had a bit of a really impulsive move there, and then had a bit of a congestion period and then cooled off there. Spartan actually sort of was probably quite rare, and it actually had it did have a bit of a hot phase there, but then it cooled right off and got actually spanked pretty hard, and then it really sort of started to build out of a really deep, ugly low. So that sort of that got down to sub 10 cents there in early 23, and then it sort of started to recover. So even if you're playing this one there and it had a bit of a good little run there initially, it did sort of falter and fail, which might have had you sort of reeling a little bit. But then once it started to build there, I mean, really the first entry wouldn't have been up to around about 14 cents there, and that wouldn't have been an impressive setup there. I don't know if it was actually even showing too much relative strength at the time. And it didn't really give you too many other setups in there as well. I mean, apart from a few little congestions in there, that's really probably the first setup there coming out of there. And look, there was a bit of volume in there as well, so it did sort of come out of that zone, but probably not the best setup initially there. But then eventually it does obviously go back, retest the high here, and give us the 52-week high, the Darbs box sort of set up and breaking out there. So that's around about 34, 35 cents there. Once it does break out here, it is a bit of impulsive and then corrective, impulsive, corrective. This sort of builds there. It's sort of pretty messy. Does sort of start slowly there. Actually breaches the 50-day moving average twice. So this is sort of one that might have shook you out a couple of times as well. So the first sort of year of trading, sort of Spartan there, it might have been pretty messy. But it does sort of probably, does break that 50, then sort of bounce back there. That's probably the first possible entry back in again. There's around about 45, 46 cents there, breaking the B wave. You are above the 50, and you have been a bit of a leader there through that market as well. So that might have sort of had you back in there. And then it does sort of congest again, another little tight little VCP there, come back to the 50 and maybe actually this is probably a better setup than the first one. And then we go here. So probably get a second entry there, somewhere around about probably 46, 47 cents there. So that's probably a better entry in there. And it does have a bit of a nice surge again. Goes for a little bit of a pause, does breach the 50 again. So it's funny how these sort of stocks, once they establish a habit, they keep following the same. This is sort of almost in tow with personality there. So we saw with DroneShield, kept staying above the 10. Once it broke out, didn't. It stayed above the 10 there. It had three surges following the same sort of path there. So we can see here, this one sort of kept breaching the 50-day, but then only just breaching, come back in again. So that might have been giving us a clue there that, sort of one to follow there. But again, there was a nice little BCP in here. So we had the first leg, second leg, tightens up here. And then that takes us at the first day up here is just above the 50-day moving average. And then it does break the B wave again up here as moved on there. So it's still sort of going a case button there, but probably not the best sort of chart. There's a few breaches and a few failures in there. Started off a bit, it doesn't give it not too many awesome entries in there either. So probably that's been it's been on that watch list for a long time. That sort of stock this year, and it's had a terrific performance there, but probably not the easiest one to trade there. You might have, that one there might have had you in and out a few times there.
You've got WA1 Resources as the next one on the chart. Obviously, with commodities, with mining stocks, it does help to have the tailwind of what the commodity's doing in the international markets and have that pushing along, which you'd know a bit of gold and uranium and other ones in previous interviews. When we look at WA1 Resources, it's a bit of a different one in the sense that they're known for niobium, which is not really a well-known commodity. Its general or most well-known application is in the use of manufacturing of stainless steel to help its strength at lower temperatures. Now, there is sort of research looking at mobility and also electric vehicles and how it can be used there. But if it's a hard resource to come by and there's a strike and it's good grade at low depths, which WA1 is showing or has been showing, then obviously it can light up like the chart that you've got here. So if you're trading a commodity stock and you don't really have that huge tailwind of well-known international prices, LME prices of copper, gold, even nickel, lithium doesn't trade as much, but it still can drive the prices of the stocks. You don't have as many markets, so you're really dependent upon analysing the chart. WA1 has been a phenomenal performer. Where would the standouts on this chart where you saw, okay, here's a setup and yeah, this is actually something that's tradable?
Yeah, look, I really don't understand that metal too well there, but obviously, there was a lot of talk about that being a fantastic resource, in terms of that rare earth sort of space there being definitely a bit of a global, significant sort of size there. But I mean, this is definitely got more of that textbook leader sort of setup, Chris, as well. And that really, we get that really impulsive surge on massive volume is how it starts. And then it goes for a bit of a contraction there, use up a bit of time there. So as again, sometimes that the pullback there can be, 3 to 6 weeks there. Sometimes it can be, 3 to 6 months. So probably a lot of the better ones I've seen here so far have pulled back around that 2 to 3 months in size. So run hard for a few weeks, run really explosive there, have big moves. So maybe like 3 weeks going up here, massive volume, and then having like a 3 month sort of contraction and the whole thing tightening up and then starting to reset again here. So this was sort of more of the classic leadership sort of setup there for some of these newer names. But, we had this VCP in here, the whole thing tightening up, and eventually we sort of break up there. So it's the thing is you see these big moves and people go, I missed this move here. That's telling us this should be on a radar now, and this should be on a watch list. And we just basically, we watch for the whole thing to tighten up, and eventually it'll break a little B wave in there. So I think the first entry there was around about $1.50 after this, 3 or 4 month target. But this is the thing here. Some of these VCPs that I follow, they're on my watch list for like, a couple of months there, just watching them, they just contract. Some of the ones I've seen actually break through. Some of them are so lightly traded, some of these newer names, it's hard to sort of take the positions in there. So I don't know whether maybe next year I might just take some small positions in my super fund for some of those names, because they're pretty interesting names. Just hard to trade big positions and maybe just trade some smaller ones. But that's how they sort of start off as smaller ones, and they get bigger and more liquid, and then they can sort of grow there. But that's probably the first entry there. And look, had a bit of a surge. Yeah, this is really interesting as well. Just look how tight that impulsive and corrective there. That's the classic thing with most of those sort of stock sets. I think, I'm not trying to think. The CU6 there had so many of these sideways consolidations there in that year there. So where it just didn't go down much down, the whole thing was sort of more of a square then, and then you get an impulsive surge there, a lot of that volume as well. And, pull back again, a light volume and an impulsive surge on volume, pull back a light volume, impulsive surge on big volume. So if you go through and analyze all those pullbacks there, you'll see very little selling on all those pullbacks there. So we know this has been running here as well. And, so look, generally you'll probably start with the 20-day moving average, which would sort of have us all the way in here, us up to, 540 or something. So, if you manage to sort of get set here at, roughly 150, you wouldn't have got out until around about 540. So what's that 300% return, or maybe 350 or something. So not a bad return just using a 20-day moving average. Because this is really does this like accelerating through here. You can see how this has stayed really tight here, all the way up here. So if you use if you tighten up into the 10 here, again, you probably would have sold some of this into some of this heat here. The key there is just not to, as Callum Magee sort of says, he says, I think this, sometimes this, he talks about stocks going up 100%, 150%, and he goes, this gone too far, I'll just go to sell it. But his rule is to just, is only to sell some of it into heat and then hold, at least use the 10-day moving average there. So even the strongest names using the 10-day moving average there wouldn't have had you out until up around, I guess 560, 570 or something like. So again, pretty solid move there. You're talking about 3.5 times your money there on whatever parcel there. So so I think you've got to sell some into heat here, but if you track this moving average there, you basically got to, the beauty of selling some here, like if you were sort of buying some at say 150, just say you got to $3, you doubled your money, and say you sold half, and you carry the rest for free. That's when the heat's off. You don't need to do anything. Just look at it every week or every few days, and just move your let the moving average just move your stop there. So you can probably just move your stop every third day, a few cents higher, a few cents higher. Well, this probably wasn't a few cents; it was probably quite a few cents. So this this sort of set up pretty nicely there, and then obviously at some stage it sort of cracks here, so it probably cracks around the 570 zone here. Then it goes for a sideways, so we really want to be out of there. Look, I think it had a little congestion there. The thing went sideways, and it did sort of break a little B wave there, but it never really had an ABC in there, Chris. Didn't really have a full correction there. So you might have bought this setup here, but you probably, if you did buy it, you probably would have gone small there because it's not really had the classic sort of setup there. But it might have had you back in there, just above $6 there.
Right. So that's
I think that was a sort of setup in there. So I think it had a little bit of a surge in there, and then sort of fizzed out again. But what I've sort of learned here is after these sort of good moves and then going sideways in there, is that they do re-emerge, and we sort of see that's the surge up to that sort of $6 zone there, and this goes, what's that? So 1, 2, 3, 4, 5 months here going sort of sideways there. Started to break down here, so this stage there you might have been thinking this is all over. You probably take this off your watch list there because it's sort of breaking lows there. It's been sitting under the 50-day moving average for quite a while now. So it's probably doing all the wrong things. So you probably take it off your list. You made your 350% and called it a day. But we know that these things re-emerge again, and we did sort of have a little bit of a pop here, had a consolidation, little I guess a small VCP there, but it does break up here. So it did give us a possible little entry there. If you were watching this, who managed to watch this for the next 5 months, that it consolidate there, you might have got a break there. You probably viewed this as a better entry up here, up around the high fives, because it's been sort of breaking a high low there, or even maybe even breaking this low here at 6 there. So you might have been maybe adding a small parcel in once you're breaking some of these old highs here. But what we saw here, I think it was this day here that broke that high there. That was obviously a game-changing day for the stock there because all that volume. So obviously we've had some good news out there. It had some massive volume there. So when you see that, sort of re-emergence there, this kicking up here, taking out a swing high there, massive volume beside it there, that's a really good signal there. So just look at that volume through here. There's the whole thing just dried up here. So as much as it may be a bit negative, no aggressive selling in the whole stage here. And then once we're sort of back, we're back in here taking out highs there, then that big volume there. So even if you waited for that, that day there, probably up around sort of 580, and if you sort of missed it, maybe bought the opening the next day at 6, this still sort of went from 6 to 11. So again,
hard trade to take that one though.
Yeah, it might be hard to take. Yeah, you sort of feel like you're buying it hop there, but this is the thing about the leaders. They sort of, they re-emerge there. They can sort of keep going here too. They've had big gains in there. Look, the one thing you got to look at there is that if they've done it once before, they can do it again. That's the sort of like stocks have sort of got personalities as well. They tend to sort of follow a similar path. So we see these winners have the big moves there, but they reset up again and do something sort of quite similar. So again, this goes from like 6 to 11 here. So if you manage to sort of just say you're slow getting on the entry here at 6, you might have been using the 10-day, because this is pretty aggressive. This day, it's, so you should have been selling some into heat here. So you might have been thinking, oh, look, got 3.5 times last time. Do I, will I get twice the money? Didn't quite get there. But you should have been selling some into some of these sort of bigger days anyway. But the 10-day moving average gets crossed over here. Just around, I think it's probably around about 980, 990. So it should have had you out around there. So again, that's buying at 6 and out at 990. That's a pretty decent return there again, for a pretty short period of time. So this is the thing, you've got to be stealthy. It's like you're the assassin waiting for the frail sheep to sort of come out onto the paddock, and then bang, comes out, and so you take out you just need to be that sort of assassin style there, so waiting for the week there, and then as soon as it shows hand, you sort of go with it. That's a pretty impulsive move there. Has a pretty decent pullback again. This is a sort of day that probably had you worried here, but it did come back to the 50 and then sort of hold here and then sort of hug here. And again, I wouldn't be coming back. This would probably, that's a pretty impulsive move there, pretty heavy volume. Like those 2 down days were the heavier days there, so that would have had you a little negative. That maybe that's it. But then it does re-emerge there, does break here. So again, if we just, this is sort of like, as we're talking about the mini-videos as well, is that instead of getting your own way, this is broken the B wave. It's a leading stock here. We just got to buy it. And you have to say this breaks out here just above $10, goes all the way to what 1480 is. So again, another 45% move here on the stock here. So in quick time, but these are big moves in quick time here. So the one thing about the good traders is you've got to be sort of, you're looking for those sort of strong names. They show that big volume early. They show very little weakness on the selling. But once they get motoring here, particularly towards the end here, some of the moves can be exhilarating. So that's why we got to keep these sort of stronger names on the list there for a bit longer than we think there. That's the one thing old leaders often re-emerge again to be new leaders. So that's one of the things that I've definitely learned here, and that's the one thing I've definitely sort of taken from this exercise here. So there's our there's our 2 little moves there. That's us buying back in at $10 then again. So has another move there. I think crosses the $13 10-day moving average. Probably thinking it's all over at $13 there. Because obviously this is a move here, Chris. So basically, again, has another pretty big pullback. This has already had 3 big moves already. So big move the first year, 2 big drives there. Again, some whopping moves there. Again, you think, this thing must be done, and then pulls back under the 50-day again, re-emerges again, and then it breaks above little B wave, breaks above the 50, and we see some volume coming in. It's like, geez, there's another entry here. So $11 there, runs up to 13. I think it crosses that. Again, it stays within the 10-day moving average. That's what it's done on the past, so it follows the same path again. Eventually, sort of crosses that something around about 1270 again. So what's that? 27%. Probably a bit less there. You're probably disappointed after the 100% gains and the 80% gains and the 40% gains. So each gain's getting smaller here. Then it cools off again, pulls back, does break through again. So again, at this stage, you're probably thinking this stock, surely it can't go again. But it re-emerges again, has a break here. The thing you sort of see out of this low here, it's coming back to the 50, a little false break again. And there's your ABC. So you look, that's the one what you want to see is those classic Elliott wave and ABC, come back and go to a new low. And then hopefully sort of maintain the 50 as well. And then breaking above it. This is why many of you would be buying this on this break here of this high again. If you sort of say, probably thinks the stock's been running too far. I don't think it's going to be a winner, but I got to take it anyway because it's my rules. And then it goes here from like $13 here to $23. So again, it's another massive move there, like a $10 move. So it goes up what's selling 80%. And again, look how it hugs the 10. So you'd noted this thing in the past there, it's hugged the 10 the whole way. So, you might have started with a 20-day moving average there, and then you might have sold some into strength up here. You might maybe pulled some back in here, or just, watch the 10 here. But eventually it sort of cracks through there around $21 there as well. So that's a cracking move. There's some great lessons in there. Look, not every stock's going to set up like that. Obviously, these are sort of rare stocks there, but there's definitely a sort of pattern there, Chris, that emerges from those sort of stocks there. Sort of that, big impulsive move early, big volume, then it, contraction in price, then it starts to break out again, volume starts to come in. Once it's moving there, there's just no selling. We're seeing a run, pullback, square, corrective pattern, no selling in the pullback, and a run again, volume again, pullback, no volume, run again, a volume, pullback, no volume. Those are the stocks we got to look at there. So, but they do reemerge. That's the thing is, don't take these leaders off your watch list too early. So I've got to probably keep my watch list a little bit heavier, particularly some of these stronger names as well.
Something that you've been doing quite a great job of is what you talk about here on this chart, October 2023, you've said it comes under the 50-day. It's broken the 10, it's broken the 20, it's broken the 50. It's not looking great. It's underperforming the market. Relative strength is on the nose. But in that period there, where it starts to build out the base, just where you've got entry on the left-hand side above October, that box you're building out, it's rebuilding the base. And that's where the launch pad really kicks in and then flares it up and says, hang on a second, Gary, this is a previous leader. It's shot the lights out before. Maybe you should be looking at this chart again. And we know that from your class presentation, which the link will be below to this video, this is something you do quite often, and you've done it with uranium companies. A few times you looked at them and said, hang on, they're lining up the launch pad. There are a lot of numbers here, a lot of uranium companies represented within the top 30 of all launchpad stocks on the ASX. Something's happening here. And one of the charts is that you've pulled out is for Bannerman. So is that something like looking at the watch list and when it drops out, is that an indication that you can use is when it lights up? Sorry, I've jumped the gun here. I've talked about Bannerman and I know your next chart's Nuix.
I thought you must be talking about the next chart, but yeah. I read it. I guess those you see in that last move there, Chris, as well. Like you can see that WA1 here. You can see it coming out of there. Like even after this had a few entries, this was pretty light volume. This pullback there, and that was sort of when it probably looked the worst. But there's there's still no aggressive selling there. And it actually started as it. You can see here, about 4 weeks there, it started to come out there. Probably broke a little B wave in there, but probably not the best one. But that was on pretty good volume, and then you go whack, and here the volume comes in on this day here, and that's when you're sort of breaking through the old highs there. I think, something's going on here. And there's probably news related as well, so you probably get that game changer news there. And look at the volume just tells you everything. This stock's been running, and then. Had a pause here, the volumes come straight back in again on some, probably some good news there. So
getting good interest.
Yeah.
Well, we'll talk about Bannerman and uranium in a second, but Nuix is the next chart you've got loaded. Now, we know they're an Australian-based multinational software company, and they specialise in unstructured data. So in the last couple of years, we've all started using and interacting with data in different ways with ChatGPT and generative AI. And having access to more data and being able to analyze it more easily or readily without having statistics, huge computational background. So this company in the forefront of that sense of being able to use more data because we're all collecting more data, and there's some odd statistic where you might be able to correct us, but something like 90% of the world's data is created within the last 2 years or something phenomenal like that. So Nuix is obviously at the forefront, the coal face of being able to help companies stay on top of it. From a charting perspective, what really stood out to you as being the opportunities on this chart?
Yeah, this is one of those sort of stocks actually had a pretty auspicious start, Chris, as well. So this, I think, remember, this might have sort of come on around in the $8 mark there. I think it might have gone to $11 or $12 in the first few months of sort of trading there. And then the whole thing sort of slid away there. It slid away to under $1 there, as we can see here. And it had a pretty less than encouraging start there, and then, but this is often the case here. If you look at some of those sort of stronger names there, sometimes the first, 9 months or maybe 18 months can be pretty decent there. So that's why I sort of think it's interesting to sort of keep an eye on the, like the IPOs, like the last 3 or 4 years, because there'll always be some leaders start to emerge out of those, some newer companies, and it can take a year or two there. Because, all the hoo-ha are sort of hitting the market. They tend to get bid up, because you're the latest, greatest, and they come on pretty hot, and then sometimes they can run for a bit. But then what happens there is the news dries up. I mean, the whole process is that, you only report twice a year, and then so all of a sudden you're not probably reporting as much, and they come to sort of waiting to see how you go, and then if they're not excited by what they're seeing, and oftentimes the best names there take a little while to get traction. So they might have a great concept or a great idea, great product, but it takes a little while for for it to sort of sell and industry to emerge, and all that sort of things there. So they can have some auspicious starts, some of these leaders there. But I guess this one here was probably started quite slowly there. It had a bit of a surge out of that low. So after getting pulverized, it did have that nice little pop. Sort of early there, I think it was early 23, and then sort of settle back, and then sort of start to build there, so you could have had a little bit of a trade there at the start of 23 there, just because it sort of did start to sort of break a few little, this little, I guess this little 1-2-1-2 pattern there, and then sort of break out here, and then you basically break into a new find there. Might have had you potentially, buying the, like Davis sort of buying the breakout there, 52-week high, things like. But this is probably the most interesting setup here was that after it's had a bit of a surge of good volume, did break to a new high. The whole thing did sort of tighten up in, so like a little bit of a descending wedge here. But the thing I like about it was that this is a little BCP, little tightening pattern. The whole thing sat on top of the previous high as well. So I do love that, sitting on top of the high after impulsive volume there. You saw here on this, the one thing about the pullback, there was no volume. So strong volume, pullback and light volume, tightened up here, and then we started to edge through. So this sort of been a cracking little signal here, coming out here as sort of around that 90 cents there. So it did break out there. Obviously had some game-changing news there. And the stock gapped up and ran and kept running here. So I think it went from 90 cents here up to 160 there. So pretty nice move. Even if you were slow, Chris, and missed the break here, bought the next day there, it's like 110 there. Still got a 110 to 160, 50 cents on 110. It's still close to a 50% move here. Again, you probably sell some of the heat. The 10-day moving average is a long way back here. So it makes it, when it jumps and explodes as this, you really do need to sort of trade some there. One thing you can look at there when you're seeing an explosive move like this is that the one thing I would personally use would be looking at the daily range as my potential stop here. So this is to see how, because sometimes really explosive moves, they just keep going up until they break a daily low. So, we didn't break a rally low until this day here. And so this would have been a negative, 1, 2, 3, 4 days up here, no low broken, then it broke the low here. So this would have been a day to sell here once it broke the low here. So it really should have been, once you saw this was down here to 135 or 136 there, you should have been getting out here on that. This thing goes through a bit of a pullback there, so this has had a pretty positive move, pretty good news. But then it goes through this whole congestion again. So we talk about sometimes it can be 3 or 4 months here. So in this case here, what are we, 1, 2, 3, 4, 5, 6, almost 7 months here of pulling back here. And then we get some good news again. We get that game changer trade, Chris, we talk about. So we get that sort of good news there. this stock's basically, I think it's had 2 years of pretty bad news, and then we started getting a year where we're getting some good news coming through. So it's funny how it's sort of like, bad news tends to follow bad news, and then once you start getting some good news, tends to sort of follow as well. So really, we sort of got a nice little move there. So when we do gap up on some really good news, I always think that should be it. The range of that low should be the stop for the day. So that whatever that low is there, roughly 105. I might have stopped at 103, 102 or something. Give yourself a couple of cents, but I would always, use that as my stop there. We saw there basically when it did gap up here, we saw big volume as well, and that's sort of gone from what's this sort of 110 here, 105 here. It did run all the way up to roughly sort of 175, 180 there. Bit choppy here, bit up and down here. Again, what are we, 1, 2, 3, 4, 5, 6, 7, 8 days up here pretty aggressively. Don't think it broke a swing low, and this is the first day it broke a swing low. So for me, this had gone up 8 days without breaking a swing low there. That would be where I would have my stop here under this low for the day. And then once we break there, what's that, 150? Yeah. So again, 110 to 150, 40% move, not bad. And then it does come back again, re-emerges, but really only might break out here. This might be, might say it's a BY break here, but doesn't really go on it. So that's maybe a failed break. Does end up coming back, ingesting, goes to a bit of a sideways move here. This is probably, this might be a little move in here, but you probably want to be breaking above this high first. But again, this might be the first little time you might look at it again here, which is probably around 165. Has a bit of a run, then the whole thing does another BCP. This is probably a better setup here. The fact that it's gone to a new high, whole thing probably nice little BCP here, probably sits on top of the old high as well. Leaves space on here as well. That's a nice little break there. I think it goes from 180 up to 220, so another 40-cent rally there. You're going to sell some in the strength there, probably looking at least just sort of 10-day moving average of stop here. You can see in this stock here hasn't really respected the 10-day that much, Chris, as well. So it's chopped back and forth. So again, we've got a personality profile there to look at, understanding the stock. So just got to, that's why I sort of think, each stock's got its own personality there, sort of follow its path. I'd probably use that daily swing low there. That's working best for it again as well. So this sort of stock does have another pullback there. So obviously, the thing you'll sort of find with those stocks that do have a pretty good run initially and then fade there, you're going to have walls of selling, and that people who have lost at $8, $9 there all the way down to $2 there. So you've got some sort of, you'll have plenty of losers in front of you. So what that does, I find that'll actually make your corrections, anytime you get big moves, so you might get the selling weights comes in a bit harder. So this didn't have really flat corrections there, had quite deep pullbacks. Because I think, again, someone who's maybe bought at $7 or $8 and then saw this thing go to $1. I thought, if I get back to $2 or something, maybe I'm going to get out, because there's so many people who just sort of try and take those losses in at some point. But it does form a bit of a nice little cup here, and then a nice little handle set up as well. So this is probably the best sort of pattern that you see for Nuix there. Was in sort of early 24 there. So I did sort of see this. This is a nice little cup and handle set up there. Pretty light volume through here as well. So I saw, some good volumes through some of these other surges there. Some good volume in there. Pretty light on this one here. Very light selling through this sort of handle. And then we saw the volume start to emerge here as well, up into the high there. I thought that looked pretty good there. And as we can see, once it broke out there, it might have been a catalyst in memory. But the volume was pretty good. We've obviously went from 220 here up to 320. So you're talking about $1 move on 220. Is what's that sort of 40-50%, 45% sort of rally there. So pretty quick time there as well. So again, you probably want to be sort of selling some of the strength and then maybe tracking the 10-day. You might have liked to have seen maybe the swing low getting stopped there. So you might have I've operated this as a swing low previously. But yeah, not so bad signals there. Did sort of start off pretty heavy there, but again, those stocks with some losers in front of them do tend to have some bigger pullbacks there. Whereas you saw there with DroneShield and Spartan and CU6, when they got to new levels at new highs, they often sort of traded in these sideways tight corrections there because no one's lost there. Everyone who's bought it is already winning. No one's losing.
So there's not the overhead resistance of previous losers wanting to sell out now that the share price is up. Everyone's winning together.
Yeah, it's a very misunderstood concept, that, because that does have a big influence on human behaviour. Like none of us want to lose, and that's how some of the biggest mistakes are made in trading there, because the ego gets the road. What was the phrase last week? The catchphrase of the losing trader is, "I'll get out when I go back to even."
Yeah,
and that's just the wrong mentality there. You just you've got to take your little haircuts all the time. But that's the thing, when you're behind there and there's losers in front of you, it's going to impact the trading and impact the stock. Whereas when there's no losers, when the stock's at new highs, there are no losers at all, and those stocks just keep running. Oftentimes, a lot of that stock too it's in the early years for us as well. A lot of that sort of stock held by insiders is locked up, so can't be traded. So the free float is often a lot less. So maybe only half the stock are available to trade. Half the stock is locked up, can't be traded. So therefore, causes these bigger rallies in these stocks to occur for a while. So, interesting.
It is. And so that gets us to where Nuix is today. We did mention and prematurely talked about Bannerman, and when the uranium companies lit up the launch pad and you sort of traded them. We've talked about that in great length in the video. When you look at Bannerman, where were the setups that really stood out to you for this specific stock in the uranium space?
Yeah, so we know that I think we did feature this actually in that video, which I'll go back and watch that twice a year, Chris, that video, because it's sort of such good lessons in there, and just to remind you what the best traders do, so that we do tend to sort of have short memories like human beings, so we do need to remind ourselves what best traders do. But it showed there that the gold and uranium in particular there was very strong, showed relative strength in that sort of August 23. I think it might have been sort of December, January 24 as well. So they were the two times there where we had 6 to 8 uranium names hitting the launch pad all simultaneously. So we had like 6 or 8 one week, and then 3 or 4. If there are that many uranium stocks on the board,
there are. Yeah,
they've had them all lining up here within 2 weeks there. So they all lit up together there. So they were showing relative strength at the time. And then basically coming out of these big consolidation patterns as well. So, it's a pretty good setup, really, because it's sort of, long period of consolidation, relative strength versus the rest of the market, and then saw some good volume there sort of coming in and, and showing some strength there. And as we're breaking out, it has some really good signs there.
Okay, so there's one there with August crossing over with that relative strength to the rest of the market. Bit of a VCP, overhead resistance coming through it, and the B-wave break at the same time, while volume's been increasing. So July, the volume's been super tight volatility, low volume, and then increased volatility, but also a lot more volume at the B-wave in the VCP.
Yeah. You got it all going on there, basically. You got a beautiful consolidation, but the VCP in here, and the whole thing tightens up, sitting on the 50 as well. So it's all culminating here. This is telling you, wow, this is screaming out here as a buy here, and then doesn't give it too much there. You probably, when this sort of starts off here, I think it's always good to start with at least the 20-day moving average as well. So probably when you're starting off, something below the 50 or something below the last low is probably important. Then once the stock starts to get going there, probably want to use the sort of the 20 here. You can sort of see here, come back and revisit the 20. Had another impulsive move, sort of sat on the 20. So we know sort of like stocks that get really crazy probably hug the 10, but most stocks that are will basically probably hug the 20. And as you can see here, we had 1, 2, 3 touches of the stock here. So I know that Callum Magee, he'll trade the strongest names. If he sees them come back to these 20s and 10, like if they come back to the 10, the strongest names, or the medium names come back to the 20, he's looking to add. So, selling the heat, add, selling the heat, add, selling the heat, wait for consolidation back to the 20, and I'm gonna buy it, become back to the 20 today, I'm gonna buy this thing. And then it goes again. So eventually they obviously does tip over here. So if you had this one, if you're long here, you would have tried to sell something to some heat there, but you might have stayed long to use the moving average there up to 260, so 167 up to 260. Again, it's a fair move there, Chris, as well. And then again, this has been a leader, showed relative strength, had some pretty good volume all the way up here. Then it has a nice ABC, and this is when I think the stock goes on alert to keep an eye on it. After it's completed a nice ABC, what this does, again, it does another beautiful VCP. The whole thing tightens up here, tightens up here. So, we've got high, low, high, low, high, low, price action tightening up here. And again, it sort of breaks out of here. So, breaks out around 280 there. It'll give you a little bit of a throwback there, but not much again. This gave us very little throwback here. Gave us, so again, another really beautiful signal here around 280 there. And what's that? Sort of start of 24 here. So there's the setup here of that. So again, the whole thing tightens up here, has a little bit of a shimmy here, and then the thing takes off here to 399 here. So 40% rally here. So again, you want to trade some into heat, maybe using that 20 day just because it has, again, this has respected the 20 in the past. So again, get it, kind of map the stock on its personality. So that's why you got to be a little bit bendy with some of your rules there, because I think you've got to bend to the stock rather than bend to your rules. Just sort of like that stock's got a certain personality there. So you got to try and sort of study that sort of stock a little bit. And if that stock has, we saw DroneShield, didn't break the 10, didn't break the 10, didn't break the 10 until it was over. Other stocks will hug the 20, hug the 20, hug the 20, and then finish over the 20 in the end. So we saw here this one was the 20 was the key here. So that should be telling us the 20 should be where we should be sitting at. And that would have had it in the trade here until 355, 360. So again, you want to sell some of the heat, pull back to the 20, might have realigned here again, puts a line, do that nice big move here. You want to be selling into that heat. But then the whole thing tips over again and pulls back. So again, we're waiting here. There was a little bit of a, this a little bit of a B-wave break here, but there's no ABC here, Chris. So it's just an A-leg. So that's why I think if you actually wait for this is the beauty of, this is probably the, Elliott wave's got a lot of stuff in there, which is cool. There's a lot of stuff in there, which is uncool and, fails all the time. But the best thing about Elliott wave, in my opinion, is the corrective rules around there. Looking for that 3-wave pullback, the A, B, C, and then buying after that. If you just wait for the 3-wave pullback and then come in after that, that would have avoided you buying in this chop here, and you would have been buying here, 340 after this sort of pullback there. And that's at a pretty impulsive move. You probably would have been hugging the 20, but you would have noticed this whole move here, because it's really come out quite explosively. It's hugged the 10 the whole way through. So you might have actually moved this up a little bit in between, because the 20 is so far away. But again, you should sell some of the heat and move this up a little bit as well. Pulls back again, gives us another break. Pretty explosive again. Now that obviously this last rally hugged at 10 here, maybe we should, this is getting pretty aggressive here. We should be, maybe moving up to the 10 or something between us as well. So I think this is an old chart here. So we've actually gone higher since then as well, Chris. So it's probably had a few more setups as well. So
right.
That is, so this is only just the last week here actually. So it's not
missing too many bars.
No, not missing too many bars at all. So I think we're pretty good there.
So that's the uranium space. You've got Gentrack, which is the next one. So Gentrack, another Australian technology company. Now, they work again with data, but in a slightly different way. So they work on compliance and software solutions, cloud-based, and they help businesses automate tasks, manage data, and then meet complex regulatory requirements. Things like resource recovery, waste management, work health and safety. So a great need, and with those areas do have a lot of compliance and a lot of moving parts and a lot of different resources and sensors to pull together. So that, working with AI and the leverage that we do have and the accessibility of more sensors, more data capturing and management, that does help with efficiencies, no doubt. And they've clearly got some wind in their sails with what the chart's doing. What I'm seeing here on the chart in front of this is we've got from June 2022 to October low in 2022. If anyone didn't see Gary's videos around that, phenomenal videos right at the time. Nonetheless, the market's trawling through a bit of a bottom, but this is a wide period, a wide box. So what does that wide box mean for you when looking at the Gentrack GTK chart?
Yeah, it's just one sort of stock. So again, it's a bit like Nuix actually. It had a auspicious sort of start there. Sort of, I think it sort of came on there, I mean, 15, 16 there, and sort of faded kind of early. Had a bit of a decent pullback. I think it might have actually gone from maybe something like 250 down to like 150. So had a fairly large decline there. Then it had a cracking run there over 2 years, all the way up to like 650. Then it collapsed to actually, over the next couple of years, collapsed to a new low, went to $1, as we've seen here. And then this is sort of when it sort of started to build here. So really sort of, had a few little pops and then come back, but didn't really sort of get going until that sort of 23 there. So it did have a few little pops in here, and that was sort of building a few high lows. So that was sort of constructive there. And then you really wanted to, once you sort of had that pop and a few high lows there, you want to sort of start to see it sort of build again. So I think this was like the second second sort of phase for the stock here. So it was just sort of starting to sort of come out of a bit of a base there. And so it's a really sort of like, like you think about an ABC and then rolled off, and then it builds again. It didn't go to new high, actually held and actually sort of moved through. So that sort of rules out it just being a corrected pattern and maybe started being something else. And so this sort of something else there, we sort of started to sort of see a little bit of a rally there, a bit of a congestion. And then it sort of did break out there. So that was pretty constructive there, because we've had a low, big washout, a bit of a rally, a bit of a three-wave move up, and then a pullback, and then another high low. So it's now got sort of two high lows set up there on a weekly setup. And now we're rallying a little bit impulsively, going corrective and then breaking out. So that would have been the first possible entry for Gentrack there, around that 156 zone there. But then what did happen there is the whole thing popped impulsively there, and that was a bit of a game changer in terms of the stock there. So real change in behaviour for the stock, and then the whole thing sort of tightened up here. So impulsive and then corrective, impulsive, then corrected that is. Then it just sort of started to go sideways in those moves. So yeah, you've got some volatility there, but we know that when we've got losers ahead, the stock's at higher levels, that you will get a bit more volatility in those corrections there. So you're going to see bigger pullbacks when there's people who have bought higher. But the whole thing builds there, keeps our sort of, keeps higher lows sort of going there. And eventually it does sort of have another little VCP in here. This is a good little signal, a good little big wave in there. And that gives us probably another trigger there around 270 there. So a bit of a VCP in here, a bit messy. This is probably a nice little clean one in here, 270. But these are the first little stops there that we might get there. We saw this run up here and actually gap up here in 420. So did have some pretty decent move here, this stock. And if we had seen this sort of stock here back in 2016, 2017, we knew that the stock had moved pretty big. So it's like sort of Satire had that big move the first year, then big pullback. We know it runs again, it can go again big, even though sort of, I don't like that stock here. We know that again, the personality of that stock can move big. It pull back. We know it can go big again. So that's why it would be on your radar, because that stock's got the capabilities of actually running pretty hard there. So after it gets to sort of $4,
You get a quick recap as you scroll through.
Recap, yeah. There's my little notion there.
Yeah.
Yeah. 1, 2. So once it sort of breaks through $4 there, definitely gaps up there, Chris, and then we go through this 1, 2, 3, 4 months consolidation again. So this is often what happens to these leaders. After they do have these big moves, they can go into like a 2 to 4 months sort of consolidation period, and then that re-emerge there. The beautiful thing of that pattern is that the price stays nice and tight. So that's really constructed there. You move up, you're really impulsive, and then you hold tight in the range there. What that says is that the sellers are struggling to push it down. So even though this stock here has actually got some people who've bought higher at, what sort of 650 in the past, it's now struggling to go down, even though we've got plenty of losers in front of us. So it's actually giving us even better signs now that even like the last pullbacks were bigger, now the pullbacks are getting shallower, which is pretty constructive there. So that's a nice big rectangle there, and eventually it breaks out of that rectangle. That's a really good signal to break out. Again, we know if you've read Bulkowski's books around rectangles, you know that it's basically got the lowest failure rate of any technical pattern. So once they sort of break out there, I think it's like might be 3% or 2 or 3%. It's pretty low here, so just not many fail there. So break out of there, keep going there. Sets up another, BCP, beautiful cup and handle, nice all set up there. Although it does a little bit of bottom testing here, it does hug the 50, and really, you'd argue there that it easily holds a 50%, even though it might have a few long channels in there.
Yeah,
it holds it. I like to sort of see that. I like to see the price side of it, because I saw something with that IDX did something similar. It had a few long tails there, but never finished below the 50. That's sort of showing the strength at the moment here as well. I think Nuix and TUA, they might have held the 38.2, but I think Nuix came back to the 50% of the handle. But then all that, so that was a really good pattern there. So, breaking about $5 here, classic, move here. So, this has been really constructive there. So, gave you a trigger here at what, probably 430, 420. Tightened up here, nice BCP, hold at 50. Don't know if you look, you might have been just held the 10. He might have stopped out some of the 10 here. The 20 doesn't really sort of show much here. Quite interesting there, because that's sort of like probably been a bit of a sedate stock. So probably you wouldn't have thought this would have been a 10-day moving average stock, because it hasn't been that dynamic. But then we know when we come out of this, this is what we talk about. I'm sure Stan Weinstein talks about big bases. So the longer the base, the more explosive the move. So that's when you can get explosive moves. That would have been an explosive move at the time there, coming out of there in a pretty quick period of time. Held that 10 there. So, but again, it sets up again. Nice little cracking move here. Beautiful BCP up here as well. Whole thing tightens up again. So this is the thing about these stocks that are running here, Chris. We know they don't show much weakness. It's impulsive and corrective, impulsive, corrective, impulsive, corrective, impulsive, corrective. Maybe a little bit deeper here, but breaks again. This is probably one of the weaker signals in there. Just probably not as tight as the last two. But the thing about these leaders, they just keep leading. So it's pretty amazing move there on that stock as well.
So good strong movements, good VCPs, and then a good breakout towards where we are now. Good volume, good shooting the lights out. So
that's our magnificent 7, Chris. I was
7.
I was going to throw a little bonus in there. I don't know if I got time. I've probably got a bit overtime here, but
you did mention it. You did give us a bit of a tease on it.
Well, I thought TUA was a pretty interesting stock as well. I think it might have been 11 out of the 10 or something there, out of the top 10 list there. So, but just quickly, this one there, again, it showed relative strength out of the low. Market finds a low in October. This is already rallying out of the lows. Did sort of make a nice little cup and handle there. Might have had you sort of coming into a B wave, in March there. If you remember, basically March was actually a low in the market as well. So this would have been showing relative strength. So basically it would have been on the launch pad for sure at the time there, TUA. I know that we sort of did see this one a couple of times there. Did see this in in start of the year, and obviously definitely saw this in March, because I remember the market had a really deep pullback into March there. That's an explosive move there. It does break above this little B wave, and it does have a little cup and handle. It goes back and retests the high here. Has a little handle there, very low volume on there. So it might have had you, this might have been a possible entry here around 145, possibly adding to it at 175. Does have a bit of a surge there. But after that sort of breakthrough there, it sets up another couple of handle, Chris, as well. So we see that's as the first handle, the first couple of handle in there, goes all the way to 220. And then this is the thing about stocks personalities then we sort of see this whole thing set up another cup and handle in here as well. There might have been a little B-wave break in there. Then the nice handle's nice and tight. So again, this is probably, I think this was definitely less than half. Might have been 38. I think on the Fibonacci there might have been 38.2. A nice Fibonacci retracement there. Hugs at 50. Breaks through here. Breaks through at 220. All that move 220 all the way up here. I mean, hugs the 10 all the way up to like 330. So even if you just followed the moving average there at 330, 220, that's a 50% rally there. And what's that? Sort of what, 2 months.
Yeah.
Yeah. So who's not going to take that? So and then look, eventually breaks to 10 here, sort of sets up there. You might have sort of didn't really have your ABC there. So again, not ideal. Then it pull back in here, but then this is probably better set up as well after pulling back there and actually starting to break through. But it does get a bit messy after that. But we've seen here high, low, high, low, high, low. It's just still hugging that 50, Chris, as well. So even now still hasn't sort of shown too much weakness yet. This is sort of still a bit of a sideways pattern here. So even though it looks extended there, we know from those other patterns, even the extended stocks, they don't just, it's probably got greater odds of breaking up than breaking down based on all the patterns I've seen here. So yes, it's extended here, you get a stop in place there, but still looks pretty robust there. Some pretty good lessons in there overall. So that's a wrap on the Magnificent 7 plus a bonus.
The Magnificent 7 on the Australian market. So we definitely do have some solid performers, those who are repeat offenders of being in pole position, leading the market higher, having a bit of a reprieve, bit of a reload, and then firing off again. So we really do thank you for unpacking these charts, highlighting where the setups are, why they are setups, what the volume characteristics are, how it's a behaviour, common behaviour of companies. It really has been helpful, and I know I'll be reviewing this like I have with the other books you've given me of US leaders from the last 5 decades. So I know this is something that you do in your spare time, I do in my spare time, and it's consistently, we're rehashing what have the best companies done to help us identify what the next ones, where they will come from and what they look like. So to that point, thank you very much, Gary Glover from Novus Capital.
Thanks, Chris. Yeah, I think there's a lot to be learned from following edge leaders as well. Some great lessons learned there, and but hopefully we're just trying to identify what they all look like, how they all start, and then so if we can find a lot of stocks that start from the similar, then maybe we'll be able to catch on those big moves. I mean, really, we're just looking at maybe if we can catch 1 or 2 of those bigger names. So there's basically 10 there. I think that was, sort of those sort of 7 or 8 there, 7 out of the top 11 their names there. Some big moves there, like 15 times to like 6 times your money. So if you're able to get, if we can all get on to maybe 1 or 2 of those each year, then that's the sort of thing. Yeah, it does. I think it's like the big, as the best traders sort of say, it's usually that sort of, it's the 20% of the trades that sort of make the 80% of the year. So that's what we're looking to do. I mean, if you think about it there, if you can sort of scale up to say 15, 20% trade size, you get if you're able to get say 40% moves there, which is understating some of those moves in there, that moves the needle on your account big time.
Hugely.
So, yeah.
Well, we know this from day traders through to position traders. I'll say the same thing. If I missed 2 or 3 of my best trades for the year, I possibly would have been negative. So it's really getting the best runs, the best wins of the year. And this is kind of a playbook for how to identify the setups.
I'm set.
Yeah. Thank you, Gary. We'll wrap on that.
Thanks, Chris.